I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askslim.
Hi, I'm Steve Miller. Call me Slim. And this is the askslim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week, and hopefully some good ideas and opportunities for you throughout the show. This was another week where the major trend in the stock market has been higher, just a continuation of what we have seen since the Trump election. Stocks stayed incredibly strong, especially when you look at the Russell, as that was up some 2% or better on the week. Other major indexes up about 1%. Foreign markets are very different, actually. Most of them under a lot of downside pressure. Notably, India gets a little bit of a bounce on Friday, but they have had big issues there with tax avoidance and with black markets, and they've gone ahead and tried to change their currency over there, and man, the market did not like that at all. You start getting in the way of the free markets and you start to see these things start to plunge. India, just a massive decline in these last several weeks, and it's been a whole different picture though when you look at Russia getting a big bounce in there, and we thought that was a much better market, and Japan, that market looking like it's going to start bottoming in there. We're expecting a firming in the Japanese market. Long-term trend in there is good, and the Japanese yen being so weak as it is really favors that economy improving. So interesting what's going on in the other foreign markets, because basically the emerging markets just under massive pressure, and that's all about the strong dollar, which is continuing right now. Bond market was weak, but kind of just we'll call it more easing to the downside than the big selling that we've seen in recent weeks. Narrower range in there, and getting at around some important supports. We'll talk a little bit more about that as we get into the short-term view. So this dollar continued strength. Friday starts to stall by a little bit, and the euro finally gets a bounce, but we've been talking about the euro and how bad it is and what it might mean as we get into the coming year. In fact, we could have Euro crisis 2017 coming. I actually think that's a high probability and might actually be what stalls all of the equity markets and starts to bring the U.S. market to the downside next year, as some kind of a panic could set in based on a lot of political issues in Europe. Gold still moving to the downside. It trades down as low as 1170. Silver small to the downside. It is better. We talk about the gold-silver ratio in our Wednesday show, Futures Speak, and talked about a trade that I put in there, as I actually think that silver is going to start favoring, in other words, stronger than the gold market. So don't miss that segment in there, because I think there is a good opportunity looking at that. Oil makes a high of around 49 and then turns down as some news comes out that, well, maybe Russia's not completely on board with this whole idea of cutting the production. They go back and forth on this, and I think they're saying a freeze is okay, but the oil market got a bounce that was strong based on the potential for some cuts, and now there's news in there that Saudi, which wanted a much bigger cut, as much as 4%, well, they could walk on the whole deal because they're not going to get what they want. So if it's not going to be much that affects the markets, why should they even bother, right? So I got a feeling that this week, as we come to the 30th, when the meeting is November 30th, we could start to see some more volatility. So oil moving down over 3% today, really giving it back compared to earlier in the week. Monday saw a pretty good move up in there based on some, favorable rumors, and it's just rumors back and forth that is moving this oil market. We expected to see new highs in the stock market. We got that, and it was based mostly on our momentum indicators, which were incredibly strong. The Russell just continues to go up. When Russell is as strong, in other words, when the third tier of the market gets to be really strong, it's like what happens is that investors are really, scraping the bottom of the barrel, trying to find things that they can buy that will benefit from this next step up in the economy. We're getting a lot more near the end as far as the economic cycle goes. We are some 8 years into it, which is extraordinary. And then when you get this move up in this third tier stocks, that kind of goes along with the whole concept. So I'm kind of thinking we're nearer the end of this, a lot nearer the end of this than we are near the beginning. In fact, maybe just a matter of a couple of months. The Trump election ignited this upward bullish move, or reignited, as we get this next leg to the upside. Got to really wonder if near inauguration we're going to come to a time when reality really sets in. Trump policies, sharply being scrutinized as far as the social type issues, and when you get to look at the more fiscal or economic issues, I'm really looking at those and saying, wow. I mean, remember Obama when he did the shovel-ready programs and had like an $800 billion expansion stimulus plan in there that nothing really helped, nothing really got done. Well, Donald Trump's plans are not that much further from that as far as spending, fiscal spending goes, and if anything, he's like Keynes on steroids. And there's a lot of other topics to talk about that as far as the FOMC goes. The benefits of the huge tax cuts, and certainly money coming in from outside of the U.S. that's been parked out there from other companies. So there's lots to discuss, and we're going to talk a lot about that later on. So in the meantime, we've got a bull market that just continues. And like we said last week, we thought there were new highs coming, and we still think there are new highs coming. Let's take a look at what the stock market did this week as we look at our 60-minute chart. And don't forget, we had only 4 days this week, but the futures didn't really know that, right? Because they continued strongly on the upside. If you look at Monday, Monday brought us oil moving up, and OPEC, those freeze talks really did help the market. So overnight they were strong, rallied, and they continued through the rest of the day on Monday. And that Facebook $6 billion buyback also lifted the NASDAQ, so that really helped. And all four indexes make a new high together. And for making new highs or new recovery highs altogether, first time since 1999. Tuesday, we saw the Trump talk about the TPP, and that the U.S. was coming out of that Trans-Pacific Partnership, and we saw the steel stocks exploding to the upside on that. That gave the market a lift. The Dow moves above 19,000 for the first time, and new home sales up about 2%, which was not bad on the upside. Wednesday, it was a quiet pre-holiday day. You see overnight not a lot going on, and then it started to turn down. But then the FOMC minutes, of course, as they seem to always do, they started to lift the market towards the end of the day. So we got a recovery, and the market ended a little bit higher on the day there also. Dollar up was big, and the bonds fell hard again. And gold, oil, and silver all moved to the downside on Wednesday. Thursday, market closed for Thanksgiving, but you can see what the futures did in an abbreviated session. They kept moving to the upside. And the Friday, here we are right now, coming towards midday, and it's going to be an abbreviated session in the stock market. And what we have here is stocks up again. Now, Wednesday, this up day right over here, that brought the 14th straight up day for the Russell. That was the best in 20 years, since 1996. And the Russell here on Friday is up again. I don't even know when it had 15 straight days on the upside, but this has been just one incredible amount of buying coming on, and really led by that bottom tier of the market, which just keeps going up. The other top tiers, the FANG stocks, those stocks that have kept the market going and held it up for so long, they're not actually looking so well right now. Take a look at our calendar for the coming week, and you will see in here that, well, the big numbers are the employment numbers on Wednesday, and on Friday the ADP is the private sector, and then the regular employment situation on Friday, and those tend to be market movers, but especially the employment numbers, and everybody's going to be watching that because, well, we're assuming that we're going to get a rate increase in December. It will be crazy if we do not get a rate increase in September, because the markets are sure pricing that in. I sent out a tweet the other day that the market's pricing in 100.02% of an increase, chances of an increase in rates in December. That's more than 100% because it actually, factors in the potential for the next month too, right? The next meeting that they have. So if the Fed doesn't raise rates now, they are so far behind the curve. I think they're crazy. You know what? I think they're crazy. All right, so let's take a look at the best of the worst for the week. We're going to do this a little differently, not even take a break because, well, it's been a short week and there's not all that much going on. So we might as well just hop right into the different stocks and take a look at what happened right now for the best of the week. Best of the week stocks, really, you got to look at the material stocks because they have had some giant moves. You get this queued up, and the material stocks, all benefiting from Trumponomics, the potential for the anti-austerity move, and how are they going to pay for all that stuff? You got to really wonder. As everybody sees this potential for rebuilding the infrastructure, and that has stimulated so much in the industrial sector, the stuff that hadn't moved in so long. Dear man, is that ever exploding? Caterpillar, they're really strong. So let's take a look here at some of these stocks. CLF, the big mover for the week, that's Cliff up 27%, and that's on top of other strong gains. We have Valet up about 16%. We have U.S. Steel. Let's take a look at U.S. Steel because, man, that stock has just been going nuts on the upside. And I'm telling you, ending this TPP or the concept of the anti-dumping type mentality, because we've had so much dumping going on of Chinese steel, that has really helped these stocks. U.S. Steel has really caught everybody in here. The analysts were all so negative in it. Look at this move in here from 16 to 33. There's a double in just a couple of months. It's just incredible. And so I got to think this stock, we're looking at our option bias rankings, and this thing is so overbought, it's unbelievable. And the pattern is suggestive in here that we are going to get a move to the downside sometime in this period right in here, which takes you in towards the end of January. So we're looking for a peak in here. It's gotten through these major resistances without any problem at all, and I really think that this one is going to start to roll over soon. But getting in the way of it has cost me some money, and I tell you that you got to really wait until you get a pretty good sign that it is rolling over, and maybe not jump on it just with anticipation. FCX, this is one we've been all over, and as our subscribers, making a lot of money. As this breaks through the inverted head and shoulders, a right shoulder neckline, and just continues to climb time to the upside. Our upside objective in here is somewhere 23, 24, somewhere down the road. That's a long way, and it might actually be even middle of next year, because you can see these patterns in here. See, this is what we caught, this multiple 3 different nested bottoms in copper and DBB and FCX, and it was a perfect bottoming in there. And so what we expect is some kind of a rolling over, some type of a correction, and then out into next year another pop like that. So really a powerful looking stock in there, and FCX up about 15% on the week, just a real powerhouse. And ATI in the steels also up about 12% in the week, so really strong. A few other stocks for the best of the week we're going to look at. Next one is GameStop, GME. This is a stock that was really beaten up and looking like it was going to get near a bottoming area. And when we look at these earnings in here, the earnings were not as bad as feared. And they did miss. There was nothing good about them, but we have a big up week in here, about 12% on the week. Note the cyclicality in here. So here's your low right over here, right? You rally and then sell off. You can see that right there. So that's the rally, the breakdown, and the sell-off. That's that right there. Perfect cyclicality. Then you get this next cycle. You can see it right in there. And the next cycle, as it peaks early and then breaks down and comes right down to this low period. We're now in the 3rd week of this advance. We're getting up near resistances right over here. I don't love the stock. I still think it's in this downward zigzag, and it's going to have to build a base and prove to me that it's a good stock. That would mean it would stall somewhere here, 26 to 28, somewhere where it is now, roll over here into the winter and build the base and then turn up. That's what it would take for me to be bullish in this stock. And earnings were not great. That was just, not as bad as feared. Deere is the next one we're going to look at, DE. Let's look at Dollar Tree, since it's in the same category, DLTR, and then we'll come back to Deere. You can see the same picture in here. This was a bad stock. This stock earnings did beat. I'm also cautious in here, as I think that the stock has more downside. I want you to see that it has this big upside gap on earnings, and usually that gives you some good momentum turned positive on this daily chart right over here, and that gave you the sign that look at this negative momentum in here and this long period of momentum that took you from August into November, and then when you turn positive you get the upside gap. It was really perfect, so I'm cautious on it. It's gotten up to this gap area right over here. Overall, this longer term pattern is not good, but again, similar to what we're talking about in GameStop, it's going to have to build a base to me, and you can see our projection that we're looking for it to roll over some point in here, come down, build that base, and then maybe do better again out into later in next year. But keeping this kind of a move going, I don't think so at all. Take a look at WYNN, WYNN, and we can see in here this has been in a corrective area. That's the yellow zone. This one up 11% on the week. It's in this 102 to 104 area, which I think is a resistance. Now note the again, we're always looking at cycles in here, and note this area right in here. This is kind of the area we expect some difficulty, so we're still thinking this could roll over. This is all anticipating that Macau gets better, and then the Las Vegas numbers have been a little bit better too, so it's getting a pop. We have liked LVS better than WYNN, and that still is the case. If WYNN gets over 109.45, that's a long way. That's what it would take to turn this into a repaired type pattern. Right now I still think there's risk in here, but up 11% on the week, and it looks like it's down into year end. So those are the stocks in our group that was the best of the week in our 320 stock analytical universe. We keep it in that area because it's high and mid caps that are the best traders. We divide it in groups, and if you want those groups, you can go to our website and download the TOS Thinkorswim link if you are on that platform, and you can have our 320 stocks divided up into the groups. So that, of course, would be very helpful. Now, let's just jump right into the worst of the week here. No breaks. We'll just keep it going. I only have four stocks to show you in here in the worst of the week. Eli Lilly, Urban, which I warned about last week. I said earnings were coming and that group has problems. CRM, which I'll just mention right now, down 7% on the week. It's based on something going on with that Microsoft LinkedIn deal, and I'm not sure. I actually think that CRM is getting to a buy area, so I want you to take a look at that one. And we'll look at Cognizant, CTSH. Those are the only ones really on this list right now. Eli Lilly, the big loser of the week, down 12%, as they had a trial on an Alzheimer drug perform poorly, and that had the stock really break. It broke actually right into a time period that we expected, and it says to us that, well, it's probably at a point where it's going to get into a bounce right here, and you could see this tail got way down here to $64 and then trades back up to 68. We think if it dips down in here, it's going to be a buy, and you'll be able to get a trade back up to right in this area, probably around 71 or 72. So we're going to look for a dip there in Eli Lilly for a buying opportunity. Urban URBN. Now, as I said, we warned about this one last week. We said the group was giving some really bad signs, and I made a comment about the teens out there being more interested in some civil disobedience than they were in shopping for pants. So look at this shooting star we had the week before, and then this big decline. This whole 3 bars makes what's called an evening star. If you break under this level at around $32, you're going to be in a red declining zone over here. This is an ugly, ugly pattern, and it's going to take a lot of work to save it. Take a look here, and you can see it gets back down near that 89-day moving average as it moves down on this big earnings break. This is a massive kicker pattern, and like if you look at my video on earnings gaps that's in our member section under Tools for Techs, we always talk about that these gaps, these kicker patterns or earnings gaps, either start something or end something. Well, it obviously ended this upward advance, and now I would say Urban has got a lot of problems moving forward. And you could see the big downside gap, and then the next day follow through. And Urban, we think, has got lots of problems in here. CTSH is the next one we're going to look at, and this stock is one that I really do not like at all. You can look way back here a year ago when it completed this major top, this big megaphone pattern that we were looking at as it was forming. So you can see the cyclicality in here. So you see these 1, 2, 3, 4 cycle patterns right there. So you can see how it moved in here. There's one right there, the other one right in here, right, and then makes a new low, which then says to you the rally will fail, and then it will likely come down right through this period. So this got a little bit of a shift in this direction in here. It rallied again and then moved down again. You can see that, and then rallied again, and then gives you this reversal right here, and that's likely to come down right again. So you can see the pattern in there as it gives you the reversal. Take a look here at the daily, and you can see that we put in a week ago this dark cloud cover, and that said you were likely peaking. You get this downside gap and underneath that 89-day, and that also is not a good pattern. So CTSH to us looks like overall a bad pattern, and a stock that's likely to continue in that stair-step downward move. Well, that's everything. I kind of combined it right today as we've gave you my opening comments and the best of the worst of the week, and I'm going to be right back with my short-term view. All right, I want to remind you before we get into the short-term view for the coming week that next week is our off week. We just don't produce any videos. We still do all of our rankings and setups, and we do our chart work for our members. So that will all continue as our master cycle analyst RV is still on task, and I'll still be answering emails. Maybe a little bit slower though, so we'll be doing most of what we do, but we just won't have any videos over the next week. So want to also remind you that if you're interested in our charts that you see with all of our analysis on it, we do analysis on about 400 different symbols, stocks, futures, ETFs, and there's 81 of them that we call our rankings and setups list, which is the very best traded stocks, which we really concentrate on those stocks, and of course futures that have the best really option volume also. So we do our rankings and setups and spend a lot of time on those daily charts also, weekly and daily, on 81 different symbols, 320 stocks, and all the other ones. It's really a tremendous amount of work and great value, we know, to all of our subscribers out there. So if you're not on Thinkorswim, you can easily enough open up an account and then get our charts right on your own platform. So that would be level 4. Take a look at that. I really think it's of great value. All right, short-term view for the coming week. We're going to look, as we always do, at light crude, the gold market, euros, the bond market, and stocks. What happened in the last week is we take an accountability. Well, it was kind of an easier week because we knew it was a holiday week. It was going to be slower, and kind of thought trends would continue. So we're going to get about 80-85% on the week as far as accuracy goes. Some moves were a little bit through supports or resistances, so that's where we got dingers, let's say, but most of the directional stuff was pretty much right on. We make little notes, arrows of how we think they're going to move during the week, and we thought light crude would go up and then roll over, and that is exactly what we got. It moved up through one resistance to the next resistance, which is not what we anticipated, so we only give ourselves like a half credit for that because the pattern was right on, but it got a little bit higher than the price level that we were looking for. So let's take a look at this as we switch over and look at the light crude market, and then you'll take a peek and see how it moved exactly as we anticipated as far as pattern goes. We thought it would go up on the week and come down. We talked about the fact that there would likely be some OPEC disappointment. This big up day is when they actually thought OPEC had something going. This big down day on Friday is when they are saying that, well, maybe not, as Russia seems to be balking on the deal. So here's what we see for the next week, and that is that, well, it probably, touches this minor support area. Now you get potentially a couple day rally right in here, and then you roll over again and move lower. That's what we're looking for, is a attempted rally into the OPEC meeting, and then when the oil market doesn't get anything exciting out of that, then it rolls over and takes a big hit. We still think the intermediate pattern is in a corrective period, and we don't think there's a lot of potential upside. So for those of you that are looking at these cycles, you can see the big one right in here. It's very clear, and we're in this next big rising phase right in here that lives within this declining cycle that comes off of the weekly. So this is a great view of cycles within cycles. Same thing here. You have this rising cycle right in here. That's this dotted line, and within there are rallies and sell-offs that you can see right like in here. And now we're about to get into that next rally phase right there. That's why we think we'll have a beginning of the week try to rally and then move down again. So that's what we have drawn on our notes, is that type of a pattern. A little attempted rally and then moving lower again, and then probably moving lower for another week after that, unless some crazy deal comes through from OPEC and producers, which I really doubt. Gold market, we thought it would move down and then would try to get a bounce No, that's what we think this week. Last week we thought a little bit different. Let's start that one over, because last week what we said was rally fails and it was still negative. So let's look right in here, and you can see that right here, that this little rally came, it failed, it didn't get quite as high as we thought it could, and then moved to the downside again. Now there's an intermediate support right over here at 111.70, and so we're looking at that right now, kind of likely to hold. We still see the dollar remaining strong, which is going to weigh on this market. And I would say that we're going to test that 1170 number again and then try to get a bounce. But I think it's really this range in here, 1202 around 1170 or a little bit below that, that we're going to hang out in, as we still have another week in this period in here. And if anything, there still is some downside risk. We said that last week, that even though we thought narrow range, that the downside risks were absolutely bigger. And we still say that right now, that the even though what we're looking for is somewhere near the end of the week, a temporary bottom in here and then curling up like that for some couple of weeks probably, we still don't think that there's anything that's going to get it out of this big downtrend right now, which you can see right in there, the perfect downward channel. And so just looking for another choppy downward week, probably holding that 1165, 1170 number, and this 1202 number providing some pretty good resistance right now, as we have a major downtrend still in place in the gold market. We think silver is better than we think gold is, as we mentioned earlier in the show. And again, we encourage you to go watch our last week's Future Speak show, which we talk about the gold-silver ratio. Take a look now at /6E, which is the euro market. We said last week it's horrible. We said that bounces will fail and that there is still big downside risk, and that we thought that the intermediate support was around 104.90. It gets down right over here to about 105.27. So it didn't quite get down to that level. Similar to what we see in gold, which is we thought it still has some downside move and then potentially moving up near the end of the week. All of that existing within this downward trend that you see here, and really, massive problems in the Eurozone. So what we're looking for in the coming week is a test of that support right around 104.90-ish on the downside in here. And then a temporary bottom with gold, and probably in the following week or two getting some kind of a bounce in there. So that's, remember, we're talking about 2 weeks out here, because we're not going to be here next week. So we're kind of looking for this type of a pattern, testing 104.90 and then getting some kind of a bounce over that following week. So we're kind of looking for the same patterns in the euro and gold. So we'll call it a small week, because we're expecting to make this bottom in here, and then that attempted rally, and it's just, as we say, a temporary bottom, because our objective in the euro is much, much lower than these levels. For the bond market, what we said last week was that we thought it was still in a major downtrend, that any bounces would fail, and we thought you should sell them. So this is the weekly pattern. I didn't actually mean to put this up, but you can see it's been in this massive downtrend, which we do not think is going to end for another 3-4 weeks yet. Here we have a pattern in here that suggests out to the middle of December, which is about 2.5 weeks away. And so what we expect is bounces to come and fail. So the bounces that came last week did not get up to the levels that we thought it could, but we were really right about the downward pressure. We thought it would be a small week, and it basically is a small week in here. In fact, the 30 years are pretty much unchanged on the week, not much in there. And we thought that this area, this green zone, which was a fib confluence, a 261.8 and a 423.6, was going to hold it and keep it kind of tight, and that's really what did happen. So for the next couple of weeks, we still see the same same pattern in here, and that is that we're going to get rallies that fail, and it keeps trugging its way to the downside in here. So the major supports that you see, like right in here, is different on the 30-year. I'll show you that in a second. We expect this to temporarily hold, to maybe get some bounces as I just drew in here, but overall this downward trend continuing, and overall the major downward trend continuing. So as far as minor resistances go, and if they had bounces, the place I think to sell is right around this area, 126.06 approximately, on this 10-year note. That would be, if we got a bounce, I think a nice place to be short. If we look at the 30-year, we'll switch over. I put up the wrong symbol here, ZB, and then you'll see the same thing. So it got through the support that was in there, and then started to move a little more to the downside, but not all that much. We pulled that support out because it kind of got under it, and it messes up this little short-term resistance in here. So if I look like this, you could see where that big support number is way down here, like under 146. On another chart, it comes out at 147, I think. And the as far as the intermediate supports go, we're right at a major 50% right over here. So there is, a good reason to believe that you can hold a little bit right now. But again, we're in this downward trend that you can see here, and we expect that to continue. This goes out to right around the middle of December, also aligning what we saw in the 10-year. So that says that any rallies in here are sales and continue to move to the downside. It could accelerate more to the downside. This number right over here, which would be a sweet place to get some shorts off, I believe, is about 154.24 as far as the 30-year bonds go. So last week for the stock market, we said that we thought we would go to new highs. We even thought that the NASDAQ would be catching up, actually, because it had looked a lot weaker. We saw the markets move to new highs. We saw all four major indexes move to new highs. We thought we should buy dips in the S&P 500. If they got down under or around that support of 2179, we never did have a dip. We're still not having any dips. So you never had really the opportunity to buy dips, or if you were short, you never had really the opportunity to pull in any shorts, because there has been absolutely no dips whatsoever. So we're going to take a look here at the SPX and take a look at what we're looking at and what the potential is for the coming week. So what generally happens is that when you get these kind of rallies, and I showed this last week, you move up through like the 15th day or so, have a little bit of a decline, and then you start to move up again. That's really what we're looking for in here. These patterns, these smaller patterns right in here, they're not giving you any dips. It looks like this right in here. I mean, is that the whole dip, or maybe a little bit more dip coming right in here? But then very likely moving up again. We've got these other big cycles pushing up. We had talked about the potential for much higher levels in here in future speak. So again, if you want to see those targets, you've got to watch the Wednesday show, and you can become a level 2 subscriber, get our 8 categories of videos for just $33. So you really, I mean, if you want to learn a ton about trading, I mean, that's really the thing to do. So the targets are higher. We think it's still going higher. We'll look for only minor dips, and then likely going to see these higher levels again. Let's I'm not going to talk much about the upside objectives. I really do want you to go watch that video again to see it, but the pattern's strong. I'm wearing the bull's hat, you can see that, and I believe that if there are any dips, it's going to be buys. The Russell's been this tower of strength. Now, what normally happens when you get up into these buying panics that we have right now is that they don't end all that abruptly. What happens is you get the first phase up, as we're in right now, then you get some little bit of chop going on, and the leaders then stall. and you start to get these like the Russell, I think the Russell will stall and have a little bit more of a pullback. But then a lot of these other beaten up stocks that have kind of missed the rally, that's what the fund managers are going to start to look at. So we start to get into a rotation where you start to creep on the upside more and make higher levels, but not quite at the amplitude, the magnitude of the move that we have had right in here. So we still think there's higher prices. We think it's going to be different stocks that are going to take over, and not so much of the third tier as we have had right now. And look at those beaten up stocks, maybe in the consumers, maybe in the retails, for the ones that have a better shot, I think, at getting some bounces in there. The ones that are celebrating the Trump victory, that will benefit from the end of TPP or the beginning of some big rebuilding of infrastructure, those stocks have priced it in already, or mostly priced it in. So those will likely start to falter and other stocks start to move. And all of that is this rotation within the continued upward advance. So it gets a little more complicated, like it hasn't been complicated already, and then it may be more of a stock picker opportunity for a stock picker than it is just for the indexes going up. So take a look and you'll see some of our stocks that look like they're bottoming on our cycle patterns if you get our charts, and you'll get some sense around those beaten up stocks that are looking like there is some opportunity for rally. And we'll probably in the next couple weeks be looking at this rotation and what stocks are the best setups for that. That's it for Market Week for today. Reminder, I won't be here next week, and so there'll be no videos at all, and then 2 weeks from now will be the next Market Week. I'm wishing you a absolutely great couple of weeks going forward. Stay out of trouble, stay out of the way of the moving freight train, as they say, and I'm always wishing you great trading.
Well, I'm going to the city.